Apple stock is splitting 4-1. This is the fifth time in history Apple stock is splitting. Is now a good time to buy Apple stock? Well, I've been looking at it a certain way, so it could be or could be not. But let me show you how, and you can decide. So let's get to it. I'm so excited. I said 4-1. Here it is, 1-4. So let's go through an example to also go over what a stock split actually is. So in this case, a stock split is actually an event that takes place, and on that particular date, there's this cost-adjusted basis amount that happens. So without getting too technical, at a super high level, essentially, before the split event, if you had 100 shares of Apple, after the split, you'd have 400 shares. Before the split, at the time of this recording, Apple is around $4.10 a share after markets, after earnings. And so from $4.10, when you divide it by 4, you have 102.50 cents. So your position amount, it's the same before and after. And if you take it from this unit of one example, if you increase it all the way up to the actual market cap itself, all it is how many number of shares of Apple are there times the price a share, and that's your market cap for the whole company of Apple. So looking on Apple's website, how many times has Apple stock split? So we see it split 4 times in past history, with the 5th time coming up. So it split the most recent time, 7-for-1 basis, on June 9th, 2014, and split on a 2-for-1 basis on February 28, 2005, June 21st, 2000, and June 16, 1987. This is a chart of Apple on Yahoo Finance. So here we are at one of the split events on June 9th, 2014. So if we zoom in and see the price action during a split event and around that time frame, so over here on June 9, 2014, the price was $93.70. So 6 months from then would be 12/9/2014. So going over there arbitrarily, if we see the price, of course it's just up in general to 114.12 cents. But the point I want to allude to is basically 6 months after stock split here, there was a price increase, and Apple in general trends upwards. So it's not the best analysis, but I wanted to highlight this angle, because if we look at a next split event over here, so we have 3/1/2005, so March 1st, 2005, the price was $6.35. So 6 months from then, if we fast forward to 9/1, we track at 6/6/09, and over here, $6.60 and $6.35, so just up but slightly after 6 months and after a year, and onwards, definitely uptrends. And so going to the other date, another split event over here on June 22nd, 2000, $3.83. 12 months later would be 12/22/2000, and of course the dot-com bubble crash, So it happens. Going finally all the way back to the 1980s, if I'm not mistaken, over here, 1987. So $1.44, so 6 months later, 12/17, if we use that metric of 6 months, we end up over here. So $1.44, and on split day, $1.48. So around the similar range, I would say. But again, this is more towards the inception of Apple as a company towards the 1980s, and it was also the first split. So we'll take it with a grain of salt in terms of proving some type of trend. But the point I wanted to say is, in 2014, I did see when Apple did split, there was a huge price increase. And so the point I want to say is, whether or not price is going to go up based on that factor or not, it's all up in the air. It depends. But in terms of trend for the long term, Apple should be going up. So we went over some of the price action around the stock split event timeframes. But the question is, why do companies even do stock splits in the first place? So at a high level, I would say that the reason they do it is pretty much just for reasons of psychology, I would say, at a high level. And in other words, to legitimately make the price look a certain way, so then it can attract new investors to probably enter in. So if you look at an example of Google, Amazon, Tesla, they're all 1K plus right now. So if it's a new investor, it does look $1,000 or more just to get one share of a company. Valuable or not, it just seems like a lot versus not. So that's a big factor. The counterpoint I want to say is that with the times changing and technology changing and developing the way it is, fractional shares really are a thing where it allows a new investor where if there's $100 a share, if you have a dollar, you truly do earn 1% of that share. So with this type of way that the future is going, with stocks, trading, how easy it is to trade, where the barrier of entry isn't that high, no fees, no commissions, you can do it from your phone, etc., etc. I think you kind of get the point where, you know, today maybe a stock split could still affect the price just because of a pure stock split situation. But I think that in the future, years later, maybe that could change. And it just depends how the stock market evolves in terms of accessibility and, of course, the interaction that the traders have with the market in general. So, overall, I just want to say thank you for watching this. I hope it was interesting. Do comment below if any feedback or otherwise, and I hope to actually make more videos like this as well if they're wanted and needed. So, yeah, hope you enjoyed it, and let's see. I'm excited for Apple. So, peace till then. Peace.